Right, my mateys, just thought I'd jump on and talk a little bit about Bookmap. Right now we're just looking at the Bookmap, and as you can see, right now, well, originally I had an order just at the 40,450 as a short order, but I'm just watching how Bookmap is playing out, and you can see where liquidity, this was around 600 Bitcoin, but liquidity's starting to move from here and coming up to the 20,500. So I've moved my order, my short order, to the 20,490. In a bid that this will break through. You can clearly see liquidity starting to drop a little bit, and we're seeing we bounced off the VWAP a number of times. It was respected here, respected here, respected here before eventually, and these are all good telltale signs, by the way, that the price is getting rejected around the volume weighted average price. So right now I'm just kind of monitoring and seeing how it goes. I've got my order in at the 24.90, but I am just continually just monitoring. I want to see a couple of things. I want to see if more sell orders come in here. That gives me good reason to believe that this may be, a good area to get in. But right now, I mean, you can see the delta bubbles, which is essentially big market orders, and we can see now big liquidity grab. Are we moving up? I want to see what happens. I still may not have had my order filled at this point. As I say, I had my order around the 24.55. May have had it filled, but here we are moving up. You can see this Bookmap, by the way, if you're not familiar with it, is just an amazing tool to look at order flow. It basically gives us a live order of what's going on. So right now, I mean, I use the Binance order book, which is all of the positions that are being held. Right now with the market orders, these are all the delta bubbles. So if you're seeing a delta bubble here, it means that's a market order who's happy to just pay the spread. Doesn't matter about whether you're filled or whatever at a certain position. They're just happy to pay that spread. And what you'll see often happening is money coming in and out of the positions. I mean, right now, as I say, we've got around 447 Bitcoin orders or Bitcoin at the 20,500 mark. If I maybe just extend this down a little second, what does the wider picture show? Bearing in mind, we've got the FOMC meeting at 6 p.m. tonight, UTC, or UK time. We've got some good orders around the 20,700, so we know that these are live orders. Got around 581 orders. Where are that? Let me just see if we zoom in a little tiny touch. Got some big orders just above the 20,500 mark. We've got some decent orders around the 20,500 mark as well. So this is just a way to see where things are. I mean, if down to the buy side, you can see we've got 511 Bitcoin here to the downside. But what will happen is the closer we move down to VWAP, the more orders that'll start to fill up here, looking for an execution to the long, for people to get back in on an order. If I hover over, you'll see in this bottom left hand corner here, this is an historical view of what the previous ask was. I mean, you can see 407, 404, 406. These are the amount of Bitcoin that want to be traded around this area. As I move my mouse across, I'm paying attention to this area here, and you can see at any one time what the orders were at this point, and the liquidity isn't moving. So this is a pretty strong area in terms of where, historically there's been a lot of sell orders around this area, which is the 20,600, and it may mean for me that maybe I want to put my sell order just below that in order to get filled, with a hope that we come up, soak up this liquidity in between here, and then come back down to the downside. As I say, we've got just over 3 hours before the FOMC data, which will be key. And what I'll be looking for is what the Bookmap's saying. Where are the entries? Where's the big amount of liquidity going to be positioned? Because that'll be where, if we have a scam wick, so let's say the news is 75 basis points, we're going to see downward rejection, but the market maker will want to push price up first, building the shorts on the way up before eventually it comes down. I mean, I think last time the FOMC meeting took place, we had a 2% rise in Bitcoin before we had a 10% drop, which is a big difference. You know what I mean? That 2% is quite a decent move. Almost within 5-10 minutes, boom, big move to the upside. Realization of what the news actually means, and then all of a sudden we get the downside action. All of those people who were longing will have got absolutely snake bitten, and we kind of turn that back to the downside. So if you are not using Bookmap, I suggest it's certainly something you should look into, because if we take TradingView as an example, as a way that we're just monitoring the data, and let's say we're only really using standard patterns, and we're using things like, I don't know, indicators. They're all lagging data. This is real live information that you're seeing right now, and we can see where the orders are coming in, taking away, adding to, removing. It's a live flow. So this is what we call order flow, and it's a powerful tool in order to get. Now, if you want to know a really interesting statistic, I didn't realize is not a lot of people understand how price actually moves. And what you've got a bid and an ask, right? So you've got what people are willing to pay and what people are willing to sell at, between the two. And right now, I mean, if we look at this light grey box here, this is the current price, yeah? And we're seeing that there's all of these orders. You can see that this is constantly going up, 35, 33, 33, 34, 35, 30. Once this goes, if there's a buy order, it will move to the next line up where there's liquidity. Once this liquidity at this current level, which is 20,425, because we've currently got liquidity being traded, see, that's just being taken out with a big order, and it's now moved to the next level. If that 8 goes to 0, depending on which way the market's going, it will either move up or it will move down based upon where the next line of liquidity will be. And one of the things, this is a very liquid market, which means at every price point there's bids, or there's orders ready to be taken up. But ultimately, if you're in an illiquid market, like some of the altcoins that you might see that have, there's not a lot of liquidity, we may have orders at the say, let's imagine this was, altcoin X or some random coin, shit coin. Let's say we had, and it was, linked to the same value as BTC. Let's just say, if we were currently trading at the bid and ask around this value, and then all of a sudden there was no liquidity across any of these price points here, but there was liquidity at the 24.90, let's just say. So all of these you'd see no red orders here. If we ran out of liquidity here, the price would go from 24.30 straight up to 24.90, because that's the next level of where liquidity is, and that's essentially what moves the price. So when you're dealing with with Bitcoin as an example, we've got lots and lots of liquidity at every single price point, which means when the price is moving, or let's say when we're at the bid and ask price, if liquidity runs dry at this point, it will move to the next line up if there's more buyers than sellers in the market, and it will go the opposite way. If there's more sellers than buyers and we don't run out of liquidity at this current price level, it will go down. And that's all that is exactly what moves the market. Simple as that. Liquidity is your friend in any market. If there's no liquidity, you get big price action swings, and it's not good for the nerves, let me just say. And we've got the volume weighted average price, which is essentially when you take volume and price into play, it's essentially where the average is. So, if you've got lots and lots of volume being traded at a specific price, but there's only one order, versus lots of smaller orders with low volume, then it's going to average out what those two price variations are. Now, this is happening milliseconds all the time. It's constantly looking at at the speed of knots of all of the different prices that's going in, and different amount of volume that's being traded. So what this tells you is this is the average price, irrespective of what the volume's been or how many orders have gone in. It's the average price with volume anticipated, with volume included as part of that. So this is, even thinking outside of the box without even thinking about what's going on, you have to, you come to the conclusion that the volume weighted average price is realistically what the price of Bitcoin is valued at. at this current moment in time. And when we're above the volume weighted average price, that means it's an advantage for sellers to short, because the price currently is below the VWAP, which means you're going to get a better price than what the average price is at that time. So you will never see the price of Bitcoin, let's just say the current price or the bid and the ask, be too far away from the VWAP. So one of the trading strategies people use is when we get a big tear away from the VWAP to a specific point, maybe a key level as an example, that's where short orders come back in, waiting to anticipate to get back down to the VWAP. And we can see it here. What happens, come up, tested maybe a key level, came back down. Whereabouts do we start to crash up again? As soon as we hit the VWAP, bang, again, hover around the VWAP. This is where the value of Bitcoin is equal to the current price action. But then we bounced back off it. Doesn't always happen. We can crash back through it, and then you'd want to put a buy order in if the VWAP is below that. I don't necessarily trade this myself because I'm not a scalp trader. I'm more swing trading. But if you're scalping, this again is another amazing tool to be able to just get quick snipes of the market and get back in and get back out. Potentially we could anticipate to move back down to the VWAP and then move up again. But what's happening all the time is every time we're above VWAP, the VWAP value is slowly increasing as well. So where we're seeing these bounces, you're also seeing a slight increase in the VWAP. So, if we keep on bouncing off the VWAP, you're essentially going to be putting in higher highs, lower highs, higher highs, lower highs, so on and so forth, until such time that you break below. Interesting point here, just to note that you can see this big red order flow here. We've got at the 20,350 mark, we've got over nearly 700 Bitcoin. So another thing to be thinking about is, realistically, if we break down below this VWAP, where essentially would we be going to? Well, you'd expect it to come and soak up this liquidity before eventually going back up again. So this is just a very quick one on Bookmap. I mean, I'm the only reason I'm doing a quick video is because I've got my setup just ready to go, but I'm also, actively looking at where to get in and get a trade, and I'm currently looking around this 20,490, or 95, just around here, just before where the big liquidity is, because what I'm anticipating happening is a slow move up, maybe a big push once we break through this liquidity, come up and soak some of this and get down. But that might mean, at the same token, that if we've got our liquidity up at this 20,500 mark, we may not get filled because it may just get rejected and move down. So that's why I'm putting my bid just below where that liquidity is. So that's all I've got for you, just a quick one. Hopefully you got a little bit out of this, and I'll see you in the next one.